Welcome to Veranda Excel. We are now entering auditing and assurance. This is an interesting topic because the name itself for the profession is auditor. Even though we call that as a chartered accountant, we are normally referred to as the auditor or statutory auditor or internal auditor, whatever case it may be. But what auditors are actually doing is what this paper, Auditing and Assurance, is talking about. One of the theory paper, but very important paper because it sets the tone for your final examination also. And you will learn based on your experience during the articles period itself, and that can also be helpful for those who are coming from direct entry to do their articles. Let us see the first chapter of your auditing paper, Nature, Objective and Scope of Audit. The question comes is, why audit is required? Audit might have been mandated by any law, or voluntarily audit might have been requested by the owners of the entity. So if you are talking about audit under any law, you know that all the companies has to get their accounts audited by an independent chartered accountant or a firm of independent chartered accountants under the Companies Act, and get an audit opinion from the auditor, attach that audit opinion along with the financial statement, and that should be submitted for the shareholders for their approval. So that means the sanctity of the financial statement prepared and presented by the management is reviewed, and maybe I can use the word not reviewed, audited and confirmed by the auditor, subject to certain specific restrictions which we are having. So we are giving a reasonable assurance that the financial statements are not materially misstated. That means it doesn't contain very huge mistakes, maybe a small mistakes, but it is not going to affect the stakeholders. That's what we will see. Then we have banking companies. Banking Regulations Act requires that all banks should get their accounts audited. Insurance company IRDA is requiring both general insurance companies and life insurance companies to get their accounts. Any other statutory bodies required by their regulators by specific act. For example, when you are having your accounts submitted to the income tax department, and if your turnover is more than 1 crore rupees, what is the requirement? Under section 44 AB of the Income Tax Act, you have to get an audit report in form 3CA or 3CB along with the statement of facts in form 3CD, statement of particulars in form 3CD, and that should be uploaded along with the return of income. Otherwise, you are supposed to pay a penalty, and the assessing officer may also go for a different style of judgment. So the Companies Act is not only the act which requires an audit to be done, but lot of other laws could also be done. So that is one thing where there is a mandatory audit to be done according to the requirement of a particular law. What is voluntary audit? For example, I am running a proprietary unit. I am running a small manufacturing unit, but I am the only owner. I need not talk to anybody. But at the same time, I wanted to get an investment from a bank. I wanted to go for a term loan. Once I am going to the bank says that please show whether this accounts has been audited, because the authenticity of the financial statements or your accounts is being certified by an independent person by doing the audit in accordance with the standards on auditing, and accordingly it gets an authority, or it gets an approval, or it gets some sort of what you call acceptance from the user's perspective. So proprietary entities can volunteer, partnership firms can volunteer, HUF can volunteer, association of persons, body of individuals, or even societies and trusts can also volunteer for getting an audit, maybe for any purpose. Like what I have said, they may be requiring to do it for the purposes of getting a loan, or maybe a strategic investor is coming in. I am running with a small capital, but I wanted another person to come into that, but the other person wanted to see what is the strength of my assets and liabilities, he wanted an audited accounts. So in that case, I automatically go for or voluntarily go for an audit. So that is what the two types of audit which is mandated, one is by law and another could be because of voluntary preparation. This particular slide, I will suggest you to completely understand for a simple reason, at least to my memory, 50 to 60 times in your examination paper, one way or other, it has come as a question. 50 to 60 times. That means in 50 or 60 examinations, this has been repeated. Let us understand what is the definition of an audit. An audit is an independent examination. That's the reason why I use the word. It is audited by an independent chartered accountant or a firm of independent chartered accountants. As an audit is an independent examination, we are talking about independent examination of what? The financial statements. The financial statement of whom? Any entity. Interestingly, the word which has been used is, it is talking about any entity, right? Whether profit oriented or not, audit is not only for profit oriented entity. It may be even for an NPO, non-for-profit organization, not for profit organization. And another thing is, irrespective of its size or legal form, irrespective of size, it may be small, it may be big, it may be giant or legal form, it may be a partnership, it may be a proprietorship, it may be a small association of persons, it may be a company, it may be a listed company, it may be an unlisted company, it may be a big company with so many subsidiaries, irrespective of its size and legal form. When what you are going to do, when such examination is conducted with a view to express an opinion thereon. So the financial statements have been audited with a view to express an opinion on that. What are all the key words or important words in this? The first thing is independent examination. That is what chartered accountants used to do. Of the financial statements, any entity, activities, size, legal form, that is what profit oriented or not, are not a consideration. For every entity it is included. Finally, what I am going to do, expressing an opinion on the financial statement. What type of expression which we will say? Whether the financial statements are containing any material misstatement. Whenever we are saying misstatement, we normally use this word, misstatement. Nothing but, misstatement is nothing but whether it contains an error. That error may be because of a mistake or fraud. Intentionally if it is done, it is a fraud. Unintentionally that is crept in, it is a mistake. So we are trying to find out whether the financial statement contains any misstatement, but we are saying material misstatement. We are not worried about small errors. We are talking about big errors. In fact, today evening I was just laughing. When I started laughing after a phone call, my team members who are sitting with me started asking, sir, is anything interesting from your friends? I said that it's not interesting from my friend. One of the client to whom we do some sort of internal assignment on behalf of the management, we are doing the management audit and we are helping the client in reviewing their financial statement, and then it goes to the statutory auditor. And the statutory auditor is actually supposed to review the entire work. We prepared and we sent it last month to the client, and client accountant has took that to the other auditor. The other auditor is known to me, and he was, after the audit is over, he was just trying to summarize to me, saying that he has gone through the entire thing and he found out that in one of the area where we have considered something as a penalty, there is a discrepancy between what we have stated in the computation of total income and what he have found out, he says there is a difference or misstatement. When we have asked him what is the amount involved, he said 88 rupees. 88 rupees, not lakhs, not thousands, 88 rupees. That 88 rupees for that company is not even the auto fare of the accountant to start from his home and to come to my office. The standards on auditing are always talks about material misstatement, whether the user's decision will change, but sometimes the auditors are by their inherent limitation sees that even a smallest error has to be corrected. But the point is, you are only giving a reasonable assurance. We will see what is a reasonable assurance, that the financial statement as a whole is not materially misstated either due to error or fraud. Misstatement is nothing but a mistake, right, or an error. If it is big material number, we have to worry about it, otherwise it is not required to be done. What is the overall objective of an audit? We have seen what is an audit. Let us understand what is the overall objective of an audit. To obtain reasonable assurance. What do you mean by reasonable assurance? On what? On the financial statements. And what that financial statement should not contain as a whole are free from material misstatement. That is what I have mentioned. Not a material error is crept in the financial statement, and I am giving a reasonable assurance. Please see the words which has been used. Reasonable. So that means what? I am not giving an absolute assurance is not given. Absolute assurance is not given. What is the meaning of absolute assurance? I say it is true and correct, then it is an absolute assurance. I cannot give. There are some limitations which we will see at a later point of time. So it says it is a reasonable assurance that the financial statements as a whole are free from material misstatement either due to error or fraud. That is what we are trying to understand. And based on the audit I have conducted, how I will give this reasonable assurance, from where it will be get reflected, to report on the financial statement. So that report, audit report, where I will give that assurance, and that audit report is to be communicated in accordance with the standards on auditing. For example, when I am talking about giving an independent auditor's report, what are all the standards on auditing which you have to take into consideration is SA 700, SA 701, SA 705, SA 706. Only 4. Simple way of understanding is 700 series standards are talking about audit opinion. 700 clean audit opinion. 701 when you wanted to qualify you use 701 is talking about key audit matters. 705 when you are qualifying, you are not comfortable on this financial statement. You believe that there are some material misstatement, but management is not adjusting that material misstatement. You give an audit qualification, that is covered by 705. And 706, there is no qualification, but you wanted to bring the attention of the user to a particular point. We call that an emphasis of matter, or giving a clarificatory of certain matters, we call that an other matters. So 700, 701s all are relating to audit report. So that is what we are saying. Have we done the reporting in accordance with the standards on auditing? Okay. To reach the audit report, we have to start with planning, execution, observations of the findings, analyzing the findings, come to a conclusion. That is the simple process which we will see as part of this. Okay, what is the scope of an audit? To form an opinion, the auditor should be satisfied that accounting information are reliable and sufficient. The reason why accounting information is reliable and sufficient, suppose I pass a journal entry, my accounting system, instead of debiting, it is crediting that particular entry, then I am not able to rely on the accounting information. accordingly reliable data should be fed into the system, so that will be the basis for financial statement. So, data reliability is one of the important area which I will look into, and I will check whether the data has been reliable and sufficient. That is important. Why it is sufficient? Unless it is sufficient, I am just doing verification of 2 invoices out of say 1 lakh invoices. Whether it will be a representative sample for all the 1 lakh invoices may not be. So, sufficient information has been obtained, which is the basis for preparation of the financial statement by the management. So, preparation of the financial statement is done by the management. We are auditing and expressing an opinion. So, preparation is never the work of an auditor. So, all aspects of the entity should be covered in the audit. That means asset, liability, income, expenditure, and I should also say that laws and regulations connected with that particular company. For example, I am auditing a company which is in tannery work. I should know what is the impact of pollution control board related directives, so that the company may be get closed if they are not following the requirement of the pollution control board. So, one of the point which we are normally talking about, understanding the client's business. Understanding the client's business is the start point. Understanding the client's business is the start point to do that. So, whenever we are starting an audit, first we will understand what is the client's business. Manufacturing. Okay, what is the manufacturing? Automobile components. What type of automobile components? Braking system. If I am talking about braking system, whether any competitors are there, or they are profitable, whether it is benchmarked with this, and what is the marketability for that particular product, or they have any stock which is relating to a model which has been abandoned. Those items, how they are dealing with that, understanding the business will help you to cover all the aspects of the enterprise. We are using the enterprise, we are not using the word company, because audit may be for a company or any type of other entity. That is the reason why we are using the word enterprise. Only when I am coming to company audit, I may be using company. In forming his opinion, the auditor should also decide relevant information is properly disclosed. This is another interesting point. Normally we miss it. People think that if the numbers are correct, it is properly validated, that is fine. But if you see, the standards on auditing requires not only to comment on the preparation and presentation of financial statement, and also the related disclosure which will help the user of the financial statement to understand the accounting treatment conducted in that particular financial statement. When we talk about that, disclosure is an important element of any financial statement. So, the relevant information has been properly disclosed in the financial statement also auditor's purview. In fact, the standard which we are talking about, qualification of SA 705, it says if an important disclosure or critical disclosure to understand the financial information is not included, the auditor should consider whether qualification is mandatory. So, that type of comes in respect of even if the disclosures is not properly done. Now, let us continue with the scope of audit. Auditor is not expected to perform duties which falls outside the scope of his competence. For example, if the auditor is doing an audit and one of the item in the financial statement is, say for example, inventory of gold or diamonds, whether I have the competence to value the gold and diamonds, it requires a special knowledge, especially when I am not talking about gold, diamond. Whether it is really a diamond or a glass piece, I do not know. As long as it glitters, I think that is a diamond. So, there is a technical capability or knowledge on this particular item may be required. So, I am not expected to perform duties outside my competence. At the same time, I cannot say because I do not know the competence, I do not know what is the value of the stock, I cannot say. What it says is auditor can rely on the work of an expert. What that does mean? I don't know the knowledge of valuing diamonds, but I can ask a gemologist to value that diamond and get a report from that gemologist and take that whether the valuation put on the financial statement is reasonable or not. So, I can do that. For example, if I am talking about diamonds, you have seen another is gratuity provision. Gratuity provision is actually done by actuary. I don't know how actuary is being done. So, there is a examination which was conducted by the Institute of Actuaries. In fact, people used to say it may be easy to pass the examination of CA, but very difficult to pass the examination of actuaries. So, in respect of actuarial valuation, whether auditor has to verify the exact valuation which has been done by employing the procedure, it simply says that it is beyond your competence, rely on the work of an expert. Only thing is, it says when you are relying on the work of an expert, what are all the things which you are supposed to do, comes by means of a guidance from another standards in auditing, which we will see in another learning module. Constraints on the scope of the audit. What do you mean by constraint? Suppose management says, in respect of 10 debtors, do not ask for confirmation. And as an auditor, I should get the confirmation that the debtors are reliable. That is what I have to get into that, right. So, in that particular scenario, if there are scope limitations, the auditor should consider that also. That is what we are talking about, scope limitations, right. Then, what is the advantages of audit of financial statement? Again, I have seen that these questions are repeated in many of your examination point of view. Simply says that it is gives little bit of authenticity on the financial statement. For example, financial interest of the persons who are not associated with the management. Small shareholders, how they get the comfort that the financial statements are properly stated? Because it is audited by an independent chartered accountant and he gives an independent audit report. So, that safeguards the interest of the people, and similarly it gives a moral check on the employees not to commit any fraud. They know that the auditor is coming. Sometimes I used to say the word auditor is like a password to enter any secret vault. Whenever I wanted to go to a client place and where they are even talking about parking is not available, the moment my car enters and if the security stops me and asks, sir, who you wanted to meet, I say I am the auditor of so and so company. The moment that auditor has been used, all gates open. He says, no problem sir, go. Sir, but parking, no problem sir, you can leave the key and I will use my valet driver to park the car, and when you are coming back we will give that. Why is that? Employees are believing that when the auditors are regularly coming and checking, there is no possibility of making any fraud, including a false claim of an expenditure is also a fraud, right. Similarly, when there are some liability for taxes, the audited statement gives an authenticity for the number which has been verified. In fact, income tax starts with computing the profit as shown in the profit and loss account as per schedule 3 to the Companies Act. That means they believe that what is stated in the audited financial statement can be the correct point. Trade disputes, they will say that carry out an audit, independent audit, and then we will do that. And also in the process, auditor also finds out that is there any avoidable wastage. You might have done this, how you are missed this. The auditor can bring out the avoidable wastage or avoidable losses. In fact, we have seen that in one of the client case, the client was doing having a hospital and a pharmacy. They kept that into two different entities. The hospital is having losses but having huge tax deducted source. On the other hand, the pharmacy is having huge profits, and being in a separate entity, it is paying taxes and the cash flow is getting affected. He said the director is the same person for both the entities, why should you have a separate entity? Why can't you think about merging this so that the profits will be get offset on this? you can have the synergy of a better working capital. That will also come as part of your audit process. Government may require audited and certified statements. Every time a statutory auditor has to issue a certificate, statutory auditor has to give an audit report. Every time certain reports or certain certificates, they have said only the statutory auditor of the company has to give, not even another chartered accountant. So that is the authenticity which we are creating. Inherent limitations of audit. What is inherent limitations of an audit? 100% I cannot do an audit. So there are certain judgment. Again, the inherent limitations of audit is a repeated question in your auditing paper. So what it says is that auditors use a lot of judgment. For example, if I am saying, I am talking about provision for doubtful debts. Provision for doubtful debts. What is the judgment I am having? I am relying on the management view that these debtors, even though outstanding for more than 1 year, will be collected. What is the evidence client is giving to me? That there is a confirmation which has come to me from that particular debtor, and the debtor has also started making payment in a piecemeal when I am doing an audit, and I am doing an audit for 31st March, but I am doing the audit in September. So 6 months gap, I am feeling that some amounts are coming in. So to that extent, that debtor need not be provided for. Some sort of judgment which I am doing, sometimes that judgment may fail. That is a limitation. The nature of audit procedure which we are doing dependent on the information provided by the client. So sometimes intentionally or unintentionally, complete information which are relevant for the purposes of audit may not have been available. If information is not available, how I can do my audit and how I can do my conclusion? Sometimes the non-availability of information is the inherent limitation of the audit. If the auditor concludes with the non-availability of information that the audit is completed, sometimes the problem will come. Another interesting point is the timeline. This is the biggest problem for audit in today's scenario. What they are expecting is, can my audit can be completed within 7 days from the end of the year? First question I ask anybody, any client, when they are coming to me and they are saying, Infosys is filing on 14th of April, TCS is filing on 14th of April, why can't my company file it on 14th of April? I simply tell them, no problem sir, give me the accounts for 11 months up to February, maybe in 15th of March. I will ensure that that is happening. The ball has been sent to their court. They don't have a proper processes to close the accounts properly, and because of that even the financial statement cannot be prepared, and how they can achieve that particular deadline. But still the insistence in many scenarios, including in a regulatory framework, is that timelines is very, very deadly in certain scenario, and because of that auditor could not carry out full verification of the work, but he is under pressure to complete his work. That may be an issue. So we have seen the inherent limitations of the audit. Let us continue with the inherent limitations. There are other matters which can also have an impact on the audit. One important point is if it is a management fraud. In fact, you might have seen that in very recent times frauds came in a bigger way. ILFS, Diwan Housing, in few years back we were having Satyam. All these frauds is also having an inherent limitations on the sanctity of the audit. The reason is why? Because if the management fraud has been committed, it is an orchestrated fraud. Very scientifically they have done the fraud. You will not be able to find out with any audit tool. That is what it says. A management fraud is very difficult to be found out, and it will take years together to come out or came out from the into the reality. So for example, Satyam case also they have said the chairman and managing director has made a declaration saying that it has took for him, say for example, for the past 7 years he was actually has to forced to fudge the accounts, and it was riding a tiger without knowing how to get out of it without being eaten by the tiger. That is what he has exactly used in his letter to the entire country, the stakeholders, saying that how the accounts have been fudged. So, if the management fraud has been done, it was audited by one of the biggest accounting firm or the audit firm, but the procedures which they have done, what is the problem? If they have done the entire procedure, how they have failed it? Whether the audit system failed or the auditing procedure failed or something beyond the auditing procedure, that is the inherent limitation of the audit. Management fraud may not be found out by any audit tool. Another problem which normally comes is related party transactions and related party relationship. In fact, whenever we are doing an audit, we are supposed to look into whether the related party transactions are at arm's length. Otherwise, there could be a possibility of intentional adjustment. Okay? That is the reason why that also makes the auditor to be more cautious about the related party transaction. If he is not concentrating on the related party transaction, he may end up with giving a wrong opinion also. Non-compliance with the laws and regulations. I must tell you that just because of these specific points, there are separate standards on auditing. For example, management fraud, there is a standard on auditing SA 240. Related party transaction, it is actually saying you have to carry out special procedures from related party transaction. There is a separate auditing standard. Understanding laws and regulations, separate standard is included. Future events which may have the ability to continue as a going concern. SA 570 is talking about going concern, how to be assessed. So, everywhere you have an issue, there is a complete guidance which was available under the standards on auditing. That is the reason why we are getting the maximum mark for the standards on auditing. Let us move on with some quick questions. Is it possible for an auditor to give absolute assurance on the financial statement? What do you mean by absolute assurance? True and correct. Whether the auditor has verified all the transaction. Let me just take a simple example. One company, private limited company, let us take an example. A private limited company is having say 450 crore of turnover, sales or revenue. For 450 crore turnover, how many sales invoices they will have? Let us assume this 450 crore turnover is a telecom company. Okay, you will consider that as a telecom company. So, they will be having millions of subscribers, right? And what is the average billing for each subscriber per month? Maximum rupees 1000 to 3000, because everybody now goes for the simple plan, data is free. So, somebody is working only at 500 rupees average revenue per user, some telecom companies are using. So, just imagine, suppose it is an average is 1000 to 3000 rupees maximum. How many invoices it should have to make 450 crore? Whether the auditor will be able to verify all these invoices. If he is able to verify all the invoices, he can give a absolute assurance that nothing is wrong in this financial statement. That is one set, it is only relating to turnover. Then I have to see the expenses side, I have to see the stock side, I have to see the debtors side, I have to see the fixed asset side. Every aspect I have to see. Maybe if I start, for my entire life I will be doing only 1 year audit, 1 year of audit. Maybe sometimes I may have to borrow some others' life also to continue my audit, but it is not possible. You have to express an opinion within 45 days from the end of the reporting period. Maybe now I can say it is 45 days is now made to 60 days in the case of listed company. Let us take a listed company case. 60 days from the end of the reporting period. March 31st, 2020, before May 31st, 2020, I must express an opinion. How I will be able to verify 100% of the transaction? So, I use sample verification or sample test. I use judgment on materiality. This is not material to the financial statement. All those aspects, because of that, the auditor can never ever give 100% comfort, or otherwise I can say he cannot reduce the audit risk to 0, and accordingly he cannot obtain absolute assurance. When I have not obtained any absolute assurance, I cannot say it is free from material misstatement. I cannot say. Free means completely nothing is wrong. I cannot say. I will only say that based on reasonable assurance only I can give. Second question is whether subsequent discovery of a material misstatement of the financial statement resulting from a fraud or error indicate a failure of conduct of an audit. Maybe I can take an example. I am the auditor. I am the auditor for a company for last 4 years. This year a management fraud was discovered. So, can I say whatever audit I have done in the last 4 years is wrong? We cannot conclude like that, because as I have already mentioned, because of the inherent limitation of an audit, there is an unavoidable risk some material misstatement of the financial statement may not get detected even though the audit has been properly planned and performed in accordance with the standards on auditing. That is what I have said. No tool can find out the management fraud. I can identify possibility of fraud. I can verify whether that is leading to a fraud, but it is a very orchestrated fraud, very difficult. That is the reason why we cannot conclude that the audit system has failed. Another interesting point is auditor to have complete independence from his audit client. If you see the name of the audit report itself, report of an independent auditor. What is independent? So, I am independent because I am in an independent country. Is it that? No. I am not connected with any way with the client, and because my judgment as an auditor is not biased, because somebody is directing me, who has engaged me. Who is engaging me? The management is engaging for doing the audit. And if the management is giving a direction, because of the direction I will get biased in expressing a correct audit opinion. I should not do that. So, I should be independent of making my own opinion, irrespective of what type of pressure are coming from the management, irrespective of what type of directions is coming from the management, to give a view in accordance with their decision. I can verify and find out what they are expecting is correct or not. If it is correct, I can issue that opinion. It is not a biased opinion, it is an independent opinion. But knowing that it is wrong, I give a correct opinion, that is not independent. That is the reason why it says that the auditor should be independent. That means he should be able to make his own judgment, not biased by the directions of the persons who have been appointed. And the independence should be displayed by independence of mind and independence in appearance, both the ways. I can have my theory of independence. I do not want to do any compromise, all those things I say, but in actual sense I am not doing it. Both in appearance I should be there, in mind, letter and spirit I should be independent. What are all the possible way in which the independence can be questioned? Self-interest thread. For example, I have given a very huge loan to the client and I am doing the audit of that client. I should always look for recovery of that loan. If the performance of the company is bad and that has been reported in the audit report, what will happen? Company share price will go down, company will not get a funding from the bank or financial institution. Repayment of my loan is also questionable. Because of that, I have a self-interest in showing a biased audit opinion. So, that could be possible thread. Second is self-review thread. This normally happens. One of the issue is that I am doing a management function, advisory work. That advisory work, then I am also doing my own audit work. That is the reason why they are saying, if an auditor is doing a management function, he should not do the statutory audit, because his own work will be reviewed and he is going to issue an opinion. For example, I have given an internal audit report saying that there is no internal controls, so all the internal controls are operating effectively, and I am going to do the statutory audit. I am going to rely on my own report that all the internal controls are existing without even verifying it. So that could be one of the self-review thread. Advocacy thread. This is also very commonly happens. The company is getting a legal opinion from you, and based on the legal opinion they are concluding that nothing is required to be provided in case of a big tax demand. That becomes an advocacy thread, because you have given an opinion, you don't want it to contradict with your own opinion. So that advocacy trust is another interesting point. Familiarity thread. In fact, in Companies Act there is a concept called rotation of auditors came in. In Companies Act there is a concept called rotation of auditors. Why rotation of auditors is required? After every 5 years an audit firm has to be changed if it is a proprietary firm. If it is a partnership firm, after 2 terms of 5 years it should be changed for certain types of companies, especially listed companies. Why? Because I am familiar with the client over a period of time. I have a sympathy for something which has been done, and sometimes the familiarity also happens because the CFO of the company is well known to me, or the CEO has known to me, or they are my family friends. There could be a familiarity thread. Because of that I will take a different view. I am not independent. And sometimes intimidation thread. What is that intimidation thread? I have faced it a lot of times in my practice. When I am not convinced, I am saying that, sir, you have to correct this, then only I can issue a clean audit opinion. But the client says that, sorry sir, because we have a pressure to show certain profits, so we cannot correct it. So we want you to allow us not to make the adjustment or correction of this adjustment, but at the same time we want a clean audit report. When there is a material misstatement, I am supposed to give a qualified audit report, but the client says I don't want a qualified audit report, I want a proper audit report, clean audit report. If I am saying no sir, it is not possible, I have to issue only a qualified audit opinion, the next threat which will come is that, if so, issue the report, but we will change the auditor, give you a resignation. So the replacement which will happen or loss of my services will also make me to bias for certain scenario. That is what we are seeing as a intimidation thread. I have faced several times, and majority of the times we have taken a call that my reputation is more important than accepting the demand of the client. That of course depending upon what is the independence of mind and what is the independence of appearance. If I am still believing that appearance I will be independent, but in mind I am not independent because I want that particular fee, it is a huge fee, I don't want to lose it. Sometimes that type of compromise is actually getting the real problem of having a threat to the independence of the auditor. Otherwise we don't have a problem. Another interesting factor, this point also I have seen several times, or I should use the word many times as a question in your examination: professional skepticism. What do you mean by professional skepticism? Suppose a client says, sir, this is a confirmation which we have got from the bank for having 500 crores of fixed deposit as at 31st March 2020. The first question which I am having is whether this confirmation is an authenticated confirmation or not. Normally we will circulate to get a direct confirmation from the bank that they possess 500 crore of deposit in respect of that particular client, right? That is what we are trying to do it. So the professional skepticism, whatever evidence which the client gives, I have a questioning mind, being alert to conditions which may indicate that there is a possible misstatement due to error or fraud, and a critical assessment of the audit evidence. That is exactly is the definition of that. Refers to an attitude that includes a questioning mind, being alert to conditions which may indicate possible misstatement due to error or fraud, and a critical assessment of the audit evidence. The auditor shall plan and perform an audit with professional skepticism to ensure that the financial statements are not materially misstated. Everywhere we are talking about not materially misstated. How we are doing? When we are planning, what type of audit evidence which we have to collect, and what is the authenticity of the audit evidence? Can I rely on this audit evidence, or I have to go for further audit evidence? That is the questioning mind. Whether the client gives a confirmation to me, confirmation in the sense he is answering and saying that this is what the fact pattern. Have I verified the fact pattern? 10 relevant questions comes because of my questioning mind, and after the end of that I will get a complete answer to ensure that the audit evidence which has been provided to me is acceptable or not, right. Necessary for the critical evidence assessment of the audit evidence, it includes sufficiency and appropriateness of an audit evidence. Let me give a simple example for you. When I am asking a client, so why this particular debtor is not collected for more than 2 years or 3 years, and why you are not making a provision? The client says, sir, we got a confirmation from the client that they owe the money. If I am just taking the confirmation and say, okay, client the other party has confirmed that money, is it appropriate and sufficient audit evidence for me? No. That confirmation all actually confirms to me that this trade receivable sitting in my balance sheet is not a bogus number. The third party has given a confirmation. What is the appropriate audit evidence or relevant audit evidence that no provision is required? For the past 3 years he has not paid. What basis I need not make a provision? Is there any bank guarantee he has given which can be invoked in case of any failure, new development which has happened, or a letter of credit which he has given, or there is some degree which has been executed and I got a lien on his property? All those things can be a evidence which will tell me that I will be able to collect it. Otherwise, this piece of information which I got as a confirmation of balance is not an sufficient and appropriate audit evidence. Getting an sufficient and appropriate audit evidence is also comes out of my professional skepticism whether this is acceptable or not acceptable. Okay? This is an important point which we have to consider. This is another point like a KYC norms. Know your client. The engagement partner should be satisfied that appropriate procedures have been performed for acceptance of a client, new client, or continuing with the existing client, and all the relevant audit engagements has been performed. Interestingly, there is a standard called, of course it is already there, SQC1, quality control in respect of audit of a financial statement of an entity. So I have to have quality control in doing an audit. There it says that before accepting a client, I should determine whether to accept the client at all. What we call that as a risk assessment. In fact, after some stories have come, some of the audit firms have said they will not accept audit of jewelry units. Companies dealing with jewelry, they don't want it to audit because they felt that it is a huge risk. I am not able to see whether the stock which they have declared is really existing, it has a value, because I am not an expert, I relied on somebody else. That expert has also given a false certificate. So some people are thinking that. Another thing is the sales is actually in cash in many circumstances. With all things has come, still cash purchase and cash sales are still possible, and accordingly they believe that. Certain industries, real estate industries, they believe that in real estate industries cash transactions are very common, and that is not passed through the financial statement, and because of that financial statement contains a material misstatement always. So whether to accept a particular client, I do a risk assessment and decide, okay, based on the risk assessment which I have seen, there is no possibility that we have to question the integrity of the management. When the integrity of the management is acceptable, whatever they prepare as a financial statement is also free of material misstatement. When I do an audit, I can get the confirmation. If the management itself is not reliable, it is not possible to accept an audit, right. So, accepting an audit is fine. I accepted the audit. Every year I have to be reappointed. Whether I can accept the audit in the first year, whether I can continue to accept the audit in the subsequent period, that is continuing the audit. In both the scenario, first audit as well as the continuing audit engagement, you should always assess whether there is any problem in accepting the particular client. Another interesting factor is SA 210, which says that the auditor should always have a engagement terms signed between the client and the auditor. That is what we call as an agreement on terms of engagement, and the standard 210 says that it is agreeing the terms of audit engagement. The reason is I should have acknowledged by the client whatever letter which I have given the terms and conditions, so that the misunderstanding between me and the client is totally avoided. What is the scope of audit? On what accounting framework we will be verifying this? What is the legal framework in which we will expressing an audit opinion? Whether our responsibility includes finding a fraud and report on the fraud, or it is only a procedure which will be incorporated in my audit plan. So, I make it very, very clear in the terms of engagement, saying that this is my scope. This is the period for which I am doing the audit. I am doing only your standalone audit, not for consolidated for all the subsidiaries. So, making a complete removal of the misunderstanding is what we are talking about when we are having the terms of engagement. And when we are saying that this is actually reducing, maybe this is again getting repeated because I wanted to emphasize it again. Now, minimum content of a terms of engagement, what it has to be: the objective and scope of audit, the responsibility of the auditors, the responsibility of the management. It is only not auditor's responsibility. When I am carrying out the audit and I want certain preconditions to be available, that comes when the management accept that these are all my responsibility to ensure the data is relevant, financial statements are prepared using proper accounting systems, and accordingly it is not containing error, fraud, everything. We are talking about internal control system is very good. So, the responsibility of the management is also very clearly mentioned. And what is the financial reporting framework which I am going to use? Indian accounting standard or accounting standard or any other rules like Reliance, when I am talking about a banking company, Reserve Bank of India, insurance company, IRDA norms, all those things which we are looking into. And what is the report which I will do, and what is the form and content of the report? That will also be part of that. These are all the minimum requirement. So, at the end of this, I think that you might have heard a very interesting story, or like a bedtime story. The key information or overview of the audit, and what is the framework with which we are doing, what is the limitation, what is the definition, what is expected from the auditors, what is the qualities of the auditor, how he has to be independent, that is what we have seen. So, audit is an independent examination of the financial statement of any entity, whether profit oriented or not, and irrespective of its size, legal form, when such examination is conducted with a view to expressing an opinion thereon. Audit safeguards the financial interest of the persons who are not associated with the management. However, there are some inherent limitations of an audit. Okay? So, that is the end of the overview of audit, and I will come back with another learning unit extending our knowledge or research and learning on auditing. Till such time, thank you.